Hi guys, my name is Brian Karp from LINY Equity Partners. This is our Q&A session. I'm going to read the questions that we receive on a daily basis. If there's a question that we happen to miss or that we don't answer or we don't clarify it properly for you, please reach out to us offline and I will do my best to answer that question. Number one question, something we receive all the time: what is exactly an apartment syndication? Simplest way I could explain it to you guys is an apartment syndication is when individuals pull their capital together to purchase large pieces of real estate, okay? For our syndication, we are multifamily syndicators, so we only purchase multifamily property. We also are value add investors, so we're only gonna purchase a piece of multifamily real estate where we feel that we can create value in that asset. The next thing you guys should know is who are the players in an apartment syndication. You're gonna have your limited partners. Limited partners would be you guys. And basically the limited partners' role and responsibilities is to bring the capital or a portion of the capital to the project. The general partner has all the other responsibilities. Next question is, how does this differ from me individually purchasing a rental property? That's a great question. The way this differs is, and I encourage that, but if you do that, you're going to be 1000% responsible for this property. With being involved in a syndication, you really have no responsibilities as a limited partner. Your responsibility is to invest your capital, and then depending on how the syndicator corresponds with you, is to keep yourself up to date with everything going on with the syndication. So in my opinion, they're totally different models. You purchasing a piece of real estate and managing it and renting it out is not passive. It's not a passive act because you're dealing with that. Even if you're dealing with a property management company, you still have to manage that manager. Opposed to the syndication, all you have to do is really sit back, keep yourself abreast of what's going on with the project, but it's the general partner's job to do all those responsibilities. Next question, who runs the deal? What's the difference between GP and LP? Okay, the general partner, that's why he or she's name is the general partner. Their job is to handle everything from soup to nuts. So responsibilities of a general partner. Number one for me is always communication. So communication with my limited partners, communication with my property management team, communication with the brokers that are helping us find the assets or sell the assets. Other responsibilities for the general partner is they have to raise all the capital for the syndication. They also have to obtain the financing for the syndication. They have to also find the property management team. Most importantly is finding the asset is a general partner's responsibility. If there's a refinance, it's a general partner's responsibility. If there's a sale, it's a general partner's responsibility. Also is managing the renovation. So for us as value add investors, the big thing for us is I have to, and my partner we have to manage the renovation. We also have to deal with all of the taxes, and I'm not talking about the property taxes. We have to deal with handling the K-1s to our investors. We also, at our syndication, provide quarterly financial statements. We also do quarterly Zoom meetings with our limited partners. So those are the responsibilities of the general partner. And as you guys can see, there's a ton of responsibilities, and that's why they get paid to be the general partner. Limited partners. The limited partner's job is really just to bring the capital. Their goal is to vet the syndicator, find the greatest syndicator, the greatest asset, but really it's a much more passive role, okay? Next question, how do I make money into syndication? Okay, so the way you make money in a syndication is the cash flow off the property or dividends. And each syndicator is different. Some of them send it out quarterly, some send it out yearly, some even do it monthly. For our syndication at LINY Equity Partners, we are value add. So generally we spend the first 18 months to 2 years fixing up the complexes. So for the first 2 years of our syndication, we actually do not pay any dividends, but our LPs still accrue all of their dividends in there. So the way that you would make money is on your dividends, and also obviously would be your sale. So when the property is sold, that's when you're going to receive probably your largest distribution or your largest amount of funds coming in. Next question, do I get monthly cash flow or how does that work? So I think I kind of explained it. Each syndication works differently. We don't pay for the first 18 to 24 months because we're reinvesting all that capital. And then from there, some syndicators we do quarterly, but some syndicators do yearly. What type of returns can I expect? So there's going to be something called a pitch deck, and there's also going to be something called a PPM, which is a private placement memoranda, and that's all going to come from the general partner. It's going to go through the exact deal that you are going to be investing in. I can just give you an idea, and this is obviously not financial advice, and I'm not soliciting capital. This is just an informational video. But for our syndication, we only purchase assets that we feel that we can give a 17% internal rate of return. So that's how we model ours, but there's some syndications that give a lot less. There's other syndications that can give a lot more. So you really have to read the pitch deck, and the pitch deck is going to be what the asset looks like, how much are they purchasing it for, what's the game plan, like what's the plan, or how are they going to create value, or how are they going to be able to return your capital. So those are really interesting pieces of material you should receive from the general partner to review, which would be the pitch deck, and that will tell you what percentages. Most of the syndications that I see are double-digit returns, right? So they're 10% returns plus. But you really have to look at each asset differently. How long is your money tied up for? That's also an open-ended question. So I can only tell you for our syndication. Our syndication, your money is typically tied up for 4 to 6 years. That's our hold period. There's other syndications that are longer term, 10-year, and there's some really short-term syndications. But I would say typically, if I'm looking at all the syndications that I've seen before, typically you're going to be in that 4 to 5 year timeline for your capital to be locked up in the syndication. All right, this is a tough question. Can I lose money? And the answer is 1000% yes. These are obviously investments. These are obviously investments that you're putting capital into. So although I believe in real estate more than anything else, although I have all of my personal family's money in real estate assets, you could absolutely lose money in investing in a syndication. That's why you need to do an amazing job vetting the syndicator, making sure you feel comfortable with them. Also looking at their business plan, making sure it's a business plan that you understand and you recognize with, and then understanding the market and the asset. And this is what I just said to someone I spoke to the other day. It's also the financing. Make sure they have the right financing. So to answer that question, yes, you could absolutely lose money investing in a syndication. Okay, what is the minimum investment? So that goes by syndication to syndication. So it's tough for me to answer that question. I can give you a rough idea. Most syndications I see starting at about 100 grand. There are some that allow as little as 50,000 into them. I've seen some that allow even more. And there's other syndications that it could be $250,000, $500,000, or $1 million. So I would say it's on an individual basis. If you're interested in ours, please reach out to us privately and we could talk to you and set up a meeting and tell you exactly which what's our minimum for that exact asset, because it also could be what asset are you purchasing and what's the minimum for that one. Who picks the property and who decides on the renovation? So that is all your general partner. That's why I love this model. It's great for somebody who owns their own business, or somebody who is a busy W-2 employee, or someone who's managing their family. The greatest thing about the syndication model is the general partner does all of that. So in our syndication, I've been to Tennessee almost a dozen times, and I've met with hundreds of brokers, and I've looked at, several properties. And so basically it's the general partner's job is to find the asset. For the assets that we have under management, we found those assets. We either met the owners or met the brokers or had a relationship through someone else. And then what we do is we sit down and we whiteboard what our business model is going to be and what our game plan is. Are we just renovating the inside? Are we just putting washer and dryers in? Are we renovating the outside, right? How are we going to raise the rents and also bring down the expenses? So that, to answer your question, it would be the general partner's job to pick the asset, pick the market, and decide on the renovation. Okay, I like these questions. The next question is, how do you find good deals? I think it's networking, right? We've been traveling to Tennessee for now. It's going on over a year now, and it's building personal relationships, because what we find is the way that we're able to get the best deals are the deals that are offline. They're not public deals, and they're individual relationships with brokers, property management groups, and just individual relationships through other people is really how we found the best assets for us to bring to our limited partners and to bring to our syndication. Okay, I feel like I'm being fired at. I love these questions. What happens if the market crashes? And that's a great question. So if the market crashes, the biggest thing I would say for our personal syndication is that we buy long-term fixed rate debt. So if the market crashed in 5 years and we were going to be exiting out, we would just hold longer. And at the end of the day, if you look at real estate over a long trajectory, real estate has always appreciated, especially if it's in good markets, it has good drivers, and it's a good asset. So I think the biggest thing to make you feel comfortable on that question is if the market did crash, it's because we generally get 10-year fixed rate debt for any of the syndications that we put together. This is my favorite question. Do I get tax benefits from being an LP? You do. And that's one of the greatest things about investing in a syndication. You're not loaning money to the general partner. You are an owner of real estate. So you would receive a K-1. You will also receive depreciation on the property. So if you guys don't know, real estate gets depreciated for 23 and a half years. So even though it's going up in value, and in our syndication, it's really going up in value because we're forcing the value there, in the eyes of the IRS, you're able to depreciate that asset. Something else that we do on our syndication is we always do cost segregation studies on our syndications, and we generally try to do that in the first year. So what does that mean? We're able to bring in an engineering firm, and instead of taking all the losses over 23 and a half years, because we may not own the asset that long, we're able to force all that appreciation for years 1, 2, and 3. So it's a huge, huge benefit. I think it really helps you if you're a real estate professional status on the IRS. I think it also really, really helps you if you have passive income doing that. But even for the W-2 employee, it's still amazing, because you get huge tax benefits from investing in a syndication, just like you owning a piece of real estate but not having to manage it and deal with it. Can I invest using retirement funds? So the answer is that is correct. You'll have to reach out to us offline so we could really look at your personal situation. But yes, you could absolutely invest using retirement funds. You have to use a self-directed IRA. And I'm sure the next question coming up is going to be, can I do a 1031? Yes, there are certain types of syndications you could 1031 out of and into, but that's really going to be on a base by base basic. So you'd have to reach out to us offline so I could answer that question better. But the broad answer is yes, you could invest with your retirement. Next question is, have you personally invested in a syndication? So I'm going to take that and say yes on all fronts. So doing this video, I own a syndication with my business partner, Anthony. So yes, we have hundreds of doors under management for our syndication in Tennessee. I also invest as a limited partner in syndication. So the answer is yes, yes. And it's funny because people say to me, Bri, how do you decide on a property management company? And I say, well, I always like the property management companies that own their own real estate and invest in real estate too. So I think it's just like that. Yes, I invest in syndications, and yes, I'm invested in a syndication because I am a syndicator. This question is, who manages the building once it's purchased? So for our syndication, being that we're out of state, we always hire a property management team that manages it. And it's our job to manage that property management team, especially during the renovation phase. We speak to our property management team at least once a week with a face-to-face, because we want to make sure that we are keeping them on track and that we're watching all the money that we are spending. It actually happens to be that one of our property management teams is actually invested in one of our syndications, just to talk to you about how close our synergy is on those fronts. Okay, this is an interesting question. I'm just going to answer it the way that I could is, can I visit the asset? Yes, I think we could definitely schedule a time for you to do a drive-by if you happen to be in Tennessee. I just don't know if I'd have you walking up to the tenants and stuff like that, but we could definitely handle that. The other question is, how often do I get updates? I'm going to try to keep this video relatively short from now. We update our LPs once a month on every single project. It's just very important communication, especially when you invest money. And then the last question is, why should I trust you with my money? Oh, I wasn't prepared for this one. I think this is a great question. I think you have to look at the experience the syndicator has in real estate. I can talk for myself and my partner. I'm in 20 years as a buy and hold real estate investor. He is over a decade, maybe a decade and a half. So I think you have to look at their track record. I think you have to, I don't know if you can know them on a personal level, but I think you have to have an opportunity to meet them, understand them, what makes them tick, what makes them drive. I think a lot of it has to do with gut, why you end up feeling comfortable with it. I think they have to have a trust factor as well. I think that's another important thing with that question. And at the end of the day, you shouldn't invest anything in any syndication or real estate that you can't, God forbid, afford to lose, right? Because there's risk to all types of investments. This was a lot of fun. Thank you for watching this video. If we missed anything or you need clarification on anything, please reach out to us. And we're excited that you're getting to know more about apartment syndications.